funds. How many of us have them? Funds. The ones you can depend on. Get those funds.
Welcome to the Balance Your Books podcast. I'm Kimberly.
I'm Keena.
And I'm April.
And we're your balanced partners. Check us out at yourbalancepartners.com. Like, subscribe, and share if you love our content.
Share.
Which we know you will.
Share.
Yeah, because it's helping you grow your business.
Sharing is caring.
All right, today we're talking about private eyes. They're watching you. They see your every move.
Who are those private eyes?
Who are those private eyes? It's the tax man cometh.
That mofo.
Shut your mouth.
Because, woo.
Yes. So, and we are, as we're filming this, it is March.
Yep,
right?
March 1st.
And it is the first month of filings,
Yeah.
depending on who, how your business is, happens this month.
Yep.
So the next 2 months are pretty important on the tax side. So before we kind of get into this, if you didn't listen to our previous podcast where it's around accountants aren't accountants, check that one out if you haven't. But there are different types of CPAs. So we are CPAs, but we are not tax CPAs. The closest
correct.
is April has probably the most experience with it, but she's on the edge.
Yes.
I dibble and dabble.
dibbles
I
and
know a little.
So, but we are not tax accountants. So we're going to keep things general. We're going to give you some key ideas you need to consider. And then we want you to take that to your tax accountant. So let's get into it. Main thing. What about filing? April, talk about filing. And what is filing? What is it? And then
Okay. So filing is sending your tax return electronically, because I don't think you can do it manual anymore. To the tax man who is a coming. And, that's your individual returns as well as your business returns. And so I think because our podcast is primarily focused on the business side, when it comes to filing taxes, and as you mentioned, we're at the 1st of March, now is the time where you need to start preparing for your partnership returns, your S Corporation returns. Those are due March 15th. And then for individual filers, corporations, LLCs, depending on how you're taxed, their filing is coming up in April 15th. So it's very important to file. I know sometimes when people haven't filed in a long time, they get scared. Don't be scared. Don't be scared.
Don't be scared.
Don't do that. Don't do that. And if you're behind, get caught up.
Yes.
Get caught up.
I think the key here is file.
Yes.
file. Yes. File,
Even
baby,
if
file.
it's an extension, if you need more time, file the extension. Because in that way, you don't get hit with the penalties. You'll still get hit with the interest, but not the penalties. For a late filing.
So
File, baby, file.
Yes.
And then in the catch up, there's another type of CPA. They're called the tax controversy CPAs, who can represent you with the IRS to help you be able to reduce your penalty. And they're not super expensive. I just met with one of our colleagues the other day who does that work. And she's not as expensive as I thought she would be. So it may be beneficial to you sometimes to hire someone who specializes in that area so that they can reduce your tax when you haven't filed for a number of years and you owed. So you can they can help you get caught up in terms of getting you on a proper payment plan and things like that. But go ahead. Own up to it. We had a client come to us who just basically said, I know I've been right. Tell that story. They basically said, I've came and I'm ready to get right.
Right. I haven't filed. I've heard about you guys for a while. And now I'm just ready. It's like clink, clink. Take me in.
Let's do it more like going to the altar.
Yeah,
You
okay,
know
going
what?
to, well, for some, that's clink, clink too. But yeah, they turn themselves in as like, I need to get right before, the tax man cometh after me. And so
Right.
it's important to file. And the thing about those tax controversy CPAs, they know how to talk to the IRS.
Yes.
I don't necessarily know how to talk to the IRS.
A lot of them used to work for the IRS.
Yes, yes.
So
Yes.
they know what they're looking for. They know the right words to use. They know the right forms to fill out.
Right.
So they have
direct
when it
lines
comes
to the
that
IRS.
expertise that we've mentioned in other podcasts, that's when it becomes important.
Yes.
Yes, get the right people, and a firm like ours, we can connect you with the right people to help you if that's what you need. But yeah, so first point, file, baby, file. All right. Then let's talk a little bit about, because some people don't necessarily understand the K-1 versus, who wants to get into that? Like
the Schedule C, the
yeah,
K-1.
just a high level. What type of filings there are?
Well, I don't want to get into it.
I mean, but
Because I don't like dealing with
as a
it.
contractor, you have to deal with
Right.
getting one.
I've had to deal with every type of
Hot
form of
flash.
a Schedule C, the K-1. The K-1 you get when you're a member of a partnership, and that kind of tells you what you have earned through that partnership. You attach that as an individual filer, attach that to my 1040.
Which means so when people go and you go to the state and you set up an LLC, you can
Yes.
set up an LLC for like $50 or something. I don't know. Whatever.
It's not expensive.
It's not expensive. And if you are in a partnership, because you may just have an LLC with you, it's yours, so you can file that with your individual. But if you're in a partnership and you've set that partnership up with the state, that partnership has to file a return.
Right.
That people miss that. Like some people get LLC crazy. I've seen people have 20 LLC. So I made an LLC because and then I had this, and then I created another LLC because and then I did this LLC.
I have one client.
And then
They
it's
got
like,
3.
Yeah. So then because I'm gonna put this business over here, and then I'm gonna put this over here in this other LLC, and it's like. And, so then me and this person gonna do this one, and then me and this. Well, you gotta file all that.
Yes, you have to
You've
file
created
tax return.
complication. You created complication like you the Coca-Cola company.
You don't need all
And
that.
it's just you and a couple of your friends doing a couple businesses, right? I mean, you've made it super complicated, but you have to do tax filings. You have to get K-1s. Those K-1s then have to go to your individual return. And so if you want to if you want to hire us as accountants and willing to pay for us to do all that, we'll be more than happy to do all that for you. But really, decide if you really need that level of complication and sophistication in your business. When sometimes those two businesses you set up may be very similar and can all be under one.
Right, right.
Because it may be the same two partners who own both LLCs. It's not different ownership. It's all the same. Go ahead, Kimberly. I can see it in your
I'm just
face.
saying, we have one.
I know.
We have a client like that.
And so
They have
it's all
3
the
different
same ownership
businesses.
group, everything. So why are you doing this under multiple LLCs and adding this complexity to your business?
I think sometimes they want to do it to protect themselves.
Or they
from,
think they are.
They think they're protecting themselves, or just even if you have one business doing one sort of thing and another business doing another sort of thing, if you're good at what you do, what you specialize in is not going to be vastly different.
Right.
But they think they need one business for this and one business for that. And you can just have one business that has 2 branches.
That has 2 different departments, 2 different lines of business.
Yeah.
Yeah, you can have different lines of business within one organization.
Yeah. Your partnership agreements, your operating agreements, things like that can dictate how money is split.
Right.
Just different things that are important when it comes to partnerships, and whether it be through an LLC or
And we'll have another podcast. We're going to really get into how you organize.
Yes.
So that's a tease. That's a good tease, April, because we'll go a level deeper on that in another podcast. And ladies, talk about the importance of you're doing your taxes. Tax man cometh. What about your financial records?
it's important to maintain good financial records throughout the year. You definitely want them on an annual basis. You need that for tax reporting purposes, but you may need to do something quarterly. And to make it easy for you, gather that information on a regular basis. And I am guilty of this. Let me tell you where I'm guilty when I do my personal tax returns is pulling together my charitable contributions. Because, and I'm claiming everything. You know, you want me to send
These
some money.
days, the standard deduction's so high.
Right. Yeah. So, well,
We'll get into that later.
yeah. But so I go through and the way I do it is I have folders in my email. So when I send a donation to a nonprofit and they send me an email, I file that in my taxes folder.
Yep.
And so I'm guilty of waiting until tax time of adding all that up. But that's a minor thing. That's a minor thing.
The fact that you know where it all is.
Right.
Yeah.
For a business, though, having good financial records that you review regularly so that when you get to the end of the year, you're not looking at a number thinking, oh, that doesn't look right. One client looking at owner's distributions, that line item. In an earlier podcast, we talked about that's how you kind of pay yourself.
Yep.
It's on the balance sheet. And when you're when you're preparing your taxes, they're doing a comparison, prior year, current year. So if owner's distributions went up a lot in the current year, then that's looking like you made a lot of money. Why are we sitting here at the end of the year and you're like, I don't know what's in this number. Why is this number so high? Because you didn't have the right people helping you with your financial statements. Again, these financial statements should be reviewed by you regularly.
That's right.
So that it's not a fire drill at the end of the
That's
year
right.
trying to figure out what's in here that should be in another account. So maintaining good, solid financials that you review on a regular basis makes tax season so much easier.
And as we said in a previous podcast, your financial statement preparation is first for you. Then it's for any loans, lines of credit to investors. Then it's for taxes, right? So you first did it for you, and you should be tracking it all year for running your business and making sound decisions. So to the point that when you get to taxes, everything's there. Everything, there should be nothing but just for our clients who have been with us for a couple of years, all we're doing at the end of the year is doing that last December closing of their financials. We put together a little bit more year-long analysis, year-over-year analysis as part of just an overall financial package. And then the financials are ready.
Yep.
And so they are too, our CPA on the tax side, they're to them ready to go, right?
And there are no surprises.
And there's no surprises.
Yeah.
Because we've been going over it every single month. So it was just what happened in December.
Yeah, and then your tax CPA can then, instead of spending time trying to get your books right or questioning you about what they're seeing because it doesn't make any sense, they can actually spend more time on the tax law, assessing what your financial situation is, what new tax laws might benefit you, what other things you might want to consider doing to put yourself in a better tax position.
Right, going into next year.
Right, which also, you may need to take into account for investing as well as receiving loans, lines of credits, and things of that nature.
Right. Because even though you're not a big business, there are things that you can do to put you in the best light for success. And that's what we're trying to get to you.
Right.
Go ahead,
I
Kimberly.
find that a lot of businesses, they'll say, again, I'm not a tax accountant, but one of the things they want to know is, how can I pay fewer taxes in the future? And that goes back to April's point. If your finances are good and we've reviewed them, then your tax accountant doesn't have to spend a lot of time and charge you for trying to get your books right so that you can file. But they can be looking at, okay, how can we decrease your tax liability in the future? Because yes, we all have to pay taxes. The rich, the 1%, they know how to avoid it. And we, those of us that make less money, are supporting and paying for this infrastructure. But we all need to know an ethical way to decrease our tax liability.
Yeah.
All within the rules.
And it all goes,
And there's ways within the rules.
yeah, within the rules. And it goes back to not waiting until the end of the year to prepare your financials for your taxes. Because the tax man is coming.
He's a
Regardless
bad mother.
Shut your mouth.
Yes. And he doesn't go. You know, it's like one of those relatives that
Overstays their welcome.
overstays their or actually
Or a rash.
just never leaves.
Right.
So you now have a roommate.
Right.
Or keeps coming back. Like,
Right.
he's never going to go anywhere. He's always going to be there. Yes, absolutely. And not only that, but I mean, they can look back at your tax returns for 10 years, okay? And if they see anything they consider irregular, I believe it's around 20%. Like if you misstate your tax return by 20% or more, that's considered fraud.
Jail.
And when you commit fraud, I don't believe there's a deadline. You know,
Yeah.
a time frame.
Right,
A time frame.
right.
Fraud is a different situation.
Yeah.
Okay. If you less than fraud, they have 10 years to circle back on your return and see whether or not they want to audit it or feel like, hey, maybe, you know, let's take another look at this or ask for additional documentation. And keep in mind that everything you do, so for the most part, unless you slide money under the table,
And we're not doing
if
that.
you're all those tax documents, those W-2s, those 1099s, those K-1s, all of that stuff gets reported to the tax man. And so whether you file or not, they know it's there. And eventually, if you don't file, you're going to get a letter that says, hey, somebody told us you made $100,000. Okay. We need our money, honey.
Yes.
Exactly.
Exactly.
And it could be like years later. Because it's like taxi cab confessions. Like for my employer, they had accidentally sent in the wrong numbers for our it's like our 401k or something.
Okay.
I forgot what it was, like stock share or something like that. But they had sent in the wrong numbers. So they finally realized it because the IRS had contacted them, and then the IRS sent us individually. All got letters like, your stuff is wrong.
Ooh.
And it was like, so I got this letter that said back in this was like in maybe 24, and it was back from like 2020. And they were like, in 2020, this was incorrect, and so do you owe us more money? And so fortunately, the company had let us know, and we were able to give whatever paperwork the IRS was looking for. But that's to your point, April. They came back. I mean, it was years later.
Oh, yeah.
And just me, a little old filer with a W-2. So don't think that you won't be at some point. You know, they may be today letting go a whole bunch of people, but there'll be other administrations. They're gonna be all back,
Right.
And they can go back and get you.
Don't think
don't
that
think.
because they're trimming down the IRS, you don't have to pay your taxes.
Right.
And back to the
Because I know somebody out there is thinking
Oh,
that.
yeah. They're thinking,
There's somebody out
now
there.
is the time.
It's
It's a free for all.
Don't think.
No, that's not how it
It
works.
doesn't work that way, boo.
And back to the file, baby, file. So I have one client who came to us, and I'm talking to him and trying to get the financials together, and I said, send me your prior year tax returns. I didn't file last year. Why didn't you file last year? Well, I got audited in 2021 and I haven't filed. If you got audited, that's the
looking
main
at you.
reason for you to file.
Right.
And so then I'm like, hold up.
And file correctly.
Yes, file correctly. And if there's a mistake, we can find it and you can do a back filing. You may get money back.
That's right.
But you gotta do it.
You gotta do it.
You gotta do it. You can't avoid it.
And then
Yeah.
we'll figure it out.
And if you make an error, guess what? It's okay. You can amend your tax return.
Yep.
You can catch it before the tax man catch it.
Yes.
And then give them an explanation as to why it's different. It's easy peasy.
And that's what we've done for some clients who came to us who had crap financials before, and we cleaned it up and we gave it to the tax side, PJC, and they did an amended return. So, and we now have the proper support for everything. We have why we did this and all of that. So we can help you. You know, us accountants out there, we can help you. The final thing I want to get to on this particular podcast is sales tax.
Oh, yes.
So this is a big thing. Sales tax for, especially there's a lot of online businesses, a lot of you are selling across the country. You have to pay sales tax. So who wants to just tell a little bit about sales tax? We get into
You
it.
probably
Okay,
are.
you're the best.
That's why I'm like, you.
That's why I thought about it.
Yeah.
All right, so sales tax. So when you are an online business, there's this thing called Nexus, and it is not.
Shampoo.
That's not the shampoo.
Yes,
I was like,
yes.
there was something. It's not the
I
shampoo.
like that Nexus you mentioned.
I remember, yeah.
Yeah.
It's not the shampoo. Nexus is when you, in a certain jurisdiction, when you have reached a certain amount of money, meaning your customer, I'm in Atlanta, Georgia. I have customers in California. When I have reached what's called Nexus in California, so I've had a number of sales, a whole bunch of people bought stuff in California, I have to pay sales tax to California. And then let's say they live in Los Angeles. I may have to pay taxes in the state of California, and the city of Los Angeles may also have taxes, a certain sales tax. So you have to pay when you reach a certain amount of sales in all different jurisdictions, all over these great United States. You have to pay sales tax, and you have to make sure that you collected it. So you are collecting it from your customer. And then you are you're a pass through. You are handing that money over to that state.
Yep.
You don't get to keep it. You hand that money over to that state or that county or that city. And it is tedious. I highly recommend that you get a system and an accountant that runs your sales tax, because we use a special system that if they pay us to advertise, we'll say who it is. But yeah, we use a system that helps us be able to find out when you've reached Nexus. A lot of you also have online, you do your online on these online shopping platforms. They'll give you the report.
Right.
And they'll sometimes will help you let you know when you reach Nexus. But from there, we had a client who said, yeah, I was getting those notices. I just ignored them.
Yeah.
And it was like, you were getting notices? You owe taxes. You're, look.
That's what the government
You're
doing.
the government. This is the government. You owe taxes. Okay, we got to go back. We got to go back, see what you owe. Because depending on the jurisdiction, you may have to file annually. Some you have to file quarterly. Some you have to file monthly. It all depends on that city, that county, that state, that hamlet, that village,
That parish.
what are
Whatever
all the
they
different
call
things
it.
they call them in all the
Right.
different states? And so that's why it's important, because hopefully your online business is growing and it's big and you're selling a lot, which means you've got to have an accounting department. You've got to have real people who know how to manage sales tax. So don't forget that.
Reach out to us.
Reach
you have
out.
questions.
Yes.
Yourbalancepartners.com.
And subscribe. Let us
And
know if you have any
share.
questions,
Yes.
because maybe in the future we'll
Share.
bring like a tax expert on who really knows that side, and we could answer some questions in the future on a future podcast. So let us know kind of what your needs are, and then we'll
Yes.
see if we can get them met. To close out, we have a shooting the topic, and this one is around music lyrics.
Music lyrics.
So Kimberly, because this is Kimberly, because
Yeah.
I listen to the beat.
Yeah.
I am a lyric person. For me to like a song, I'll hear the beat will catch me, but I will either pull up the lyrics or something like that. But I'm guilty of, in the past, in my youth, not knowing what certain songs were about. And it's hilarious now that I find out. My number one song that I laugh about is by Candy Staten, Young Hearts.
Oh,
Young hearts, run free.
Yeah.
You know what she says next?
Oh, nobody else.
Never be caught up like my man and me.
Oh.
And a lot of people will
they are-
play
yeah,
that
that is
song
right.
and be like, I've been married for 40 years. And they young hearts, like they were young hearts.
Yeah.
But what you didn't do, you didn't run free. Because back in 1976,
Right. That means
Sister Staten was warning us, women, you might end up with the babies, but you won't have the man.
Oh no.
So run free.
Run
Right.
free.
Don't get
Like,
caught up.
if your young heart, and look, this is not an anti-marriage podcast, but what I'm saying is a lot of people would play that song and be like, yes, they step into it and I'm in love. And I'm like, but that's not what that song is telling you.
Yeah, it's telling you to actually be out of love.
Well,
be out of that situation.
Be free from messed up situations.
Right. Yes, run free from that.
Yeah, I'm so fortunate. More recently, I saw a reel where she's talking about how, she was in an abusive relationship. And she's talking about, we talk about self-love and self-care.
Yeah.
She was talking about that in 1976.
All right. But we thought it was
about
love.
And
because they weren't watching
hard.
Yeah.
And
I think Reasons was the other one.
Oh, yeah, Reasons.
Well, you know what? It was about love. You know why?
Why?
Love of self?
Yes.
Love of self.
Yes. It was about love. But, another one is Reasons. You know that by Earth, Wind, and Fire. The reasons that we're here. Okay, so why are we here?
Since that
The karaoke
we feel our feelings won't.
We feel our feelings won't disappear.
Yeah.
Right, but we in something we ain't supposed to be in.
Oh. That's the reasons?
Yes.
It's all those
Yeah,
reasons.
so we should be playing Reasons at the wedding.
Oh. yeah. Because that's the reasons why we need to get apart.
Even the church might play a little bit of Stairway to Heaven. We're not going to heaven that way.
Yeah.
That's not what they're talking about.
What are they talking about, Kimberly?
We're climbing the stairway to heaven.
Yeah.
And
What are they
back in the
talking
day, when you talk about sexual things, it was coded.
Stairway to heaven. Yeah.
Step
By step. Yeah. And they play at the church?
I've seen churches, play
because it said heaven.
Stairway to Heaven. They think,
I'm going to see the Lord.
It's
well,
going
some
up
people
yonder.
call Lord.
They call
So
on
does
him.
that count?
Yes. So
So if you call the Lord.
it is funny to me how people will take a song and just because it's got a good beat and it make you want to sway.
Yeah.
And they think about, I was little when I found out Brandy was a dog.
Oh, yeah.
I was little, but I really miss you,
Brandy. Yeah.
When are you coming home?
Yeah, Brandy. Yeah. And Brandy was dead.
Brandy was a dog.
Yeah, but Brandy
And a
died,
dog.
right?
Yeah. But it just amazes me.
All right. Well, we're going to close it. Listeners, we miss you, like Brandy.
And we're gonna take your finances to the stairway to heaven.
Karaoke queen.
Step by
Karaoke
step.
queen.
Step by step. Yes. And it will be ecstasy.
Yes.
Yeah.
When you're making that
when
money.
you're making that money,
Yes.
tell me it won't.
Yeah.
All right. Well, that is Balance Your Books podcast. And remember, you can check us out on yourbalancepartners.com. Like us, subscribe,
And
share, tell a friends. Right. If each of you tell 10, then maybe we'll mention some of these products. They give us a little money. All right. But thanks for joining us today.